Hi there, my name is Natasha Palmer and I'm a mortgage capacity expert, and my role is to carry out mortgage capacity assessments. Now, if you're wondering what is a mortgage capacity report and what do mortgage capacity experts do, then keep watching. The following video will explain everything in just a few minutes. So firstly, what is a mortgage capacity assessment? Well, the assessment is a detailed investigation into an individual or couple's mortgage borrowing capabilities. The assessments can be used for any type of dispute resolution, but predominantly for divorce and separation. And the assessments are presented in a manner which are suitable for use at court, but can be equally as beneficial outside the courtroom and for mediation purposes. Now, as mentioned, they are predominantly used for divorce and separation. And sadly, divorce, as we know it, brings about change. A change in circumstances, a change in lifestyle, in future goals and aspirations, and inevitably a change in finances. And although priorities can differ with each divorce, finances are often at the top of the worry list. And whether circumstances within the marriage are in good shape or bad shape, understanding and agreeing on suitable living arrangements is often a big part of the divorce challenge. And deciding who should live where often depends on who can afford it the most, which in turn can lead to further delays, frustrations, and animosity between divorcees. So the reports that I produce are designed to provide everything there is to know about current or future mortgage borrowing capabilities, whilst ensuring the results are accurate and reliable enough to help negotiate the right settlement. An assessment can be based on any financial circumstances, whether they are a current arrangement or a potential future arrangement. And this can really help to highlight how certain financial decisions or disputes will affect an individual's ability to buy a new property or retain their current home going forward. This may include, but isn't restricted to, disputes over the amount of maintenance to be agreed upon, how best to share assets for use as a deposit for a new property purchase, the repayment of debt, changes in earnings following divorce, for example benefit entitlement, or the number of hours worked might need to be considered, or even how retaining a property might affect further mortgage borrowing. And you can find out from future videos in more detail how these various factors can really make a difference to mortgage borrowing, so keep an eye out for those if you're interested. Now, once the financial scenarios to be considered are confirmed, the mortgage capacity report will confirm for each of those scenarios the amount of borrowing considered to be the very maximum each party is able to obtain. And examples of how much this amount of lending could cost will also be included in the form of example quotations, highlighting what the monthly payments might be, any fees associated with taking out the mortgage, along with potential stamp duty land tax. The maximum borrowing is of course important, however there's no point in considering the maximum borrowing if it is unaffordable. Now you might think, why would lenders confirm an amount of mortgage borrowing that isn't affordable? Well, this is because lenders only take into account certain outgoings when assessing affordability, and the report will therefore consider all outgoings, confirming whether the maximum borrowing is affordable, and if not, how much mortgage borrowing is affordable. And this can really help to highlight what changes may need to be made to outgoings and to one's lifestyle in order to afford a certain amount of mortgage borrowing. Once the maximum and affordable borrowing has been established, along with examples of costs, any other important information will also be detailed, and this may include certain aspects of our research that is important and should be considered. For example, if an individual receives child benefit and their children are approaching an age where this benefit will stop, it's important to know that mortgage capacity may start to reduce as their children get older and lenders stop using this income for lending purposes. So in a nutshell, that is a mortgage capacity assessment. But as mentioned, please keep an eye out for future videos where I'll be going into the various scenarios that can be considered within an assessment, along with other benefits of using the reports. So, I've spoken about what is a mortgage capacity assessment. Now let's look at the person behind the assessments, the mortgage capacity expert. Well, an expert in this field should be a highly qualified mortgage advisor who has plenty of experience in the world of mortgage advice. And for myself, I've been in this industry since 2004, and I started my career as an independent advisor. And being an independent advisor is really important, and I'll come back to that shortly. And I started advising in 2007, which I'm sure many of you will remember was the year the economy crashed, was an interesting time for me, but also gave me an advantage. Because unlike other advisors who were in the industry before the credit crunch, I had no prior knowledge of previous lending methods and instead was busy getting on with the new lending regime, which I think taught me to be a cautious and sensible advisor. And they're two qualities I think are really important for someone in my role, especially if the assessments being produced are used to negotiate a person's financial future, i.e. their divorce settlement. In terms of qualifications, I studied with the Professional Finance Society, and I continue to keep abreast of any new exams or courses available to maintain my expert status. And I do hold the most recent, most advanced qualification, which is actually called the Advanced Mortgage Advice Qualification. Now, going back to what I mentioned about the importance of being an independent advisor, and for those of you who do not know what that is, it's somebody who isn't tied to a particular lender and is one that can advise and have access to the whole of the mortgage market. A good example of this, if you were to go down to your high street bank, that particular bank could only discuss and provide information about their own mortgage products and criteria. If you needed something to compare that to, you would have to go along to another bank and so on. Whereas an independent mortgage advisor can simply consider all of the different lenders available on your behalf. So we're now coming to the end of this video. I hope it has been useful, and as mentioned earlier, I will be releasing more videos discussing specific case studies, so please keep an eye out for those. If you would like to purchase a mortgage capacity assessment, please download the relevant pack from our website or call me on the number showing on the screen if you have any questions. But that's all from me today. Thank you for listening. I'm Natasha, helping you negotiate the right divorce settlement.